And this one's been a big outperformer. Gokaldas Exports. It surged nearly 50% in June. It's almost doubled since the start of 2016. Mangalam is here to give us a lowdown on what's making the stock take. Mangalam?
Indeed, Rima, Gokaldas Exports, if we just look at the move, for a market cap of 445 crore rupees, the company's moved, the stocks moved 47% this month. In fact, most of the gains have come in post their fourth quarter numbers, 91% and 148% in this year and the last 1 year itself. So a little about the company. It is an apparel manufacturing company, and as the name suggests, 80% of its revenues comes from exports itself. As of the end of FY15, they have 26 factories. 2 of them they have sold in the course of FY16. We'll come to that in a bit. But we need to know a little about the promoter of the company as well. Earlier it was owned by the Hindujas, and then in 2007 the Blackstone Group invested in the company, and they hold 57.4% stake in the company. Mind you, when Blackstone invested in the company, the share price was 275 rupees, so still they are sitting on a bit of a loss because the company has been making losses. In FY11 to FY14 the company has been making losses. FY14 the losses came off a bit and narrowed to just 7 crores, and the company turned around in FY15 and FY16, made a profit of about 35 crores in FY15, while this fiscal they made a profit of 61.3 crores. Now, why that could have happened is because the company is selling off its non-core factories and non-core assets. When Blackstone invested in the company, they had around 46 factories, and the factory numbers have come down from 34 to 26 as of end FY15. In FY16 itself, we will be, as we would have known, and we have been reporting that the company has sold 1 factory to Raymond for about 28 crores, and the board also approved sale of 3 other factories in Bangalore, Hyderabad as well as Mysore. Now what this has done, apart from giving them some profit on sale of land and buildings, which amounted to as much as 44 crores in FY15 and 46 crores in FY16, it has also improved their investment, their cash and fundamental operational flows as well. So for a company which has a market cap of 445 crore, the cash has risen from 15 crores in FY13 to 211 crores in FY16. So the cash sitting on the books is as much as half of their current market cap, and this despite the stock running as much as 150% in the last 1 year. And the tipping point or the inflection point for the stock to move higher was the fourth quarter results. Not only did they get profit from sale of lands and buildings, they also started to turn around operationally. In the fourth quarter, while the total income was up just 23.5%, the EBITDA actually grew by 850%, as well as the margins, which came in at 13.7% versus 1.8% earlier. So after the move, the FY16 EPS is at 17.4, and the stock is trading at a trailing PE of 7.3 times. And remember, if we take into account the last quarter's performance, it could be trading at anywhere between 4 to 5 times FY17 earnings, which is lower as compared to the other textile peers, which trade at anywhere between 8 to 12 times itself. So that's about Gokaldas Exports.
Okay, Mangalam, that's most interesting. Thanks so much for highlighting and putting it in perspective why Gokaldas Exports could have doubled in the first 6 months of this year. Cash of nearly 40%, it's turned around. The company has made its operations far more efficient by selling off the non-core assets. In fact, that stock has gained ground just in the last few minutes as well.